Good evening. This is the Post-Market Recap by AGI Era. Today is Friday, January 16th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a battle between bulls and bears, with a slight lean towards caution as major indices finished marginally lower. The S&P 500 finished the day down 0.06, settling at 6940.01. Technically, the index is now trading just below its previous close, indicating a lack of strong directional conviction and hovering near a psychological level of 6900. The Nasdaq 100 also closed lower by 0.07% at 55529.26. The Dow Jones Industrial Average finished down by 83.11 points, closing at 49,359.33. Crucially, trading volume today was lighter than average for the S&P 500, coming in at approximately 2.7 billion shares. This implies that today's marginal moves lack strong long-term conviction from institutional players, suggesting a more hesitant market as we head into the weekend. Market breadth and sentiment. Under the surface, the fear gauge or VIX is trading at 15.86, a slight uptick of 0.13% from its previous close. Despite the minor dip in the broader market, the VIX remains relatively subdued, suggesting this is a controlled rotation rather than widespread panic. We are seeing a clear divergence in sector performance. Money flowed noticeably into technology XLK, which gained 0.11%, while utilities XLU lagged significantly, falling 0.50%. The spread between these two sectors today tells us that investors are favoring growth-oriented sectors over defensive plays, albeit with a cautious undertone given the overall market's flat performance. This indicates a selective appetite for risk, focusing on areas with perceived strong future earnings potential. The macro engine room. The primary driver of today's moves can be traced back to the bond market and broader economic sentiment. The 10-year Treasury yield settled at 4.232%, up on the day from its previous close of 4.16%. This move is significant because rising yields increase the cost of borrowing for corporations and consumers, directly creating a headwind for interest rate-sensitive sectors like housing and potentially dampening corporate investment. The narrative news today highlighted healthy economic data providing a boost to the dollar and dimming Fed rate cut hopes, which aligns with the upward pressure on bond yields. Investors are clearly recalibrating their expectations for future rate cuts in the face of persistent economic strength. Meanwhile, the U.S. dollar index is up, trading at 99.117, reflecting the stronger economic data and reduced expectations for aggressive Fed easing. Crude oil is trading around $59.40 per barrel, responding to a slight increase on the day, possibly influenced by broader market sentiment and supply-demand dynamics, though no specific major news catalyst was identified for oil today beyond general market movements. The AI and Tech Monitor, turning to the leaders of this market, artificial intelligence and big tech. Nvidia finished the day down 0.51% at 186. Microsoft closed up 0.70% at 459.86, while Apple closed down 1.4% at 255.1%. Other notable movements within the Magnificent Seven include Amazon up 0.38%, while Alphabet, Meta, and Tesla all saw slight declines. The mixed performance in this group is notable because it suggests a more discerning approach from investors within the tech giants. While some, like Microsoft and Amazon, showed resilience, others experienced minor pullbacks, indicating that even the market leaders are not immune to profit-taking or sector rotation, especially in a session with lighter volume. After hours and look ahead. Looking at the after hours tape right now, shares of PN's Financial PNC are moving significantly, up 2.47%, and Vistra Energy Corp is also seeing gains, up 2.35%. These movements could be indicative of specific company news or sector-specific catalysts emerging post-market. As we pivot to tomorrow, the calendar brings us no major economic catalysts as it is a Saturday. However, investors should specifically watch the trajectory of the 10-year Treasury next week, as its continued upward movement could signal further shifts in market sentiment and sector leadership. This wraps up a volatile week. The key takeaway for your weekend strategy is to closely monitor the bond market and the evolving narrative around Fed policy. The resilience of the dollar and rising yields, even with mixed equity performance, suggests that the market is grappling with the implications of a stronger-than-expected economy and potentially fewer rate cuts than previously anticipated. This dynamic will likely continue to shape investment decisions in the coming weeks. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.